Okay, so that we're long here. After this, it seems really late. Excuse me, seems really late to me. We missed the turn down here. Long straight move, pull back, and then get long at 10 ticks. So move stop to entry -5, and then you know, the 20 tick target is right there at 28.75. We just about hit it, and then the larger target is up there. Yeah, we're making new highs here. Okay, so I hit first target, not trailing by 20. So we're coming back here to the entry now. So yesterday we saw a couple cases where we pulled back just enough to stop us out, and then it turns around. And it's part of that motivation to use a bigger trail. The data shows that the 20 tick trail is more profitable, even though we notice those times when it pulls back and stops us out and then goes our way, and it hurts. And because it hurts, we remember it more clearly. It does, trading two contracts, so it does give you options you don't otherwise have. And part of the trade-off we're making here is that, okay, so I made a little bit of money here, so that actually pays for another trade that takes a loss. Whereas trading a single contract, I'm just scratching out there. And it does kind of, it's certainly looking like, oh my gosh, I pulled back, I got stopped out to the tick, and now it's going to advance my way. This is where the automated trading comes into play, because you don't do anything, and in fact the idea is you're not even watching it, it just does what it does, so you don't have to deal with the emotional angst of the pain of getting stopped out and then it goes your way, or taking the loss, or the further internal roiling that goes on, that you want to do something here. You're not supposed to. You know you're not supposed to. You're supposed to. That trade's done. You need to wait for the new trade. And so, what the automation does for you is just removes that from the equation. All right, here we are at the end of the session. My result +5, so scratch. Let's take a quick look at what happened. I think we saw this live here. Get the first target, pull back just, the stops. You can see the stop is just a little too tight. The trailing stop is 20 ticks. And otherwise we'll stay in that, though it does chop sideways for a long time. Have the potential there to make a nice profit if we're not trailing quite so tightly. And then, let's see, we get long here on this pullback and give back 10 ticks, so that's where we scratch out for the day. This is 9 o'clock. On the left, so we need to chat about this now because there's something new here. This is up just under 24 points. This is simulation. And what we're doing is we're starting to look at volume profile and incorporating it into the model. And so let's get to the beginning of the day. So index open is here, all right, and the value area high, the high of the value area is this blue line, and the low is this pink line, okay. And then the yellow lines that you see are the low volume nodes, but these are the low volume nodes for the current profile, which is at the end of the day, and that's not useful. You want to know where are the low volume nodes, while the bars are drawing. All right, and so that's what we've done here. Is there's a custom study we've written that identifies the nearest low volume nodes for the current bars. Okay, And so there's a couple things going on here. One is that we're starting to take a look at, okay, well, what do those low volume nodes look like while in real time? And we want to be able to look at it historically. And then we'll only take, currently the way this is set up is that we'll only take trades when we're outside of the value area. So you can see that line right here. All right, so when we're outside, we'll consider taking trades. As it happens, we break out here of the value area. None of these are takeable codes. These are too aggressive. And then it wants to get long here, but we're in, the blue background means no longs, and that's because it's the chop filter saying, pay attention to the fact that you've set some levels here. And you're going to chop to the upside. You'll notice that you see the low volume node, this kind of pink red line, changing as the bars are drawing. So there's the low volume node in real time. When these bars were drawing, it had changed to here, and then as this trading occurred, the low volume node moved down, and then it was to here, and then it was to here. I think it's very interesting. You can see those arrows on the plot here. We were talking in the room about it's very interesting to take a look at this turning behavior here, right at that low volume node. So this is the kind of thing I'm interested in. Low volume node means low volume nodes mean that not a lot of trading occurred at that price level. So either it's bouncing off of it or it's blowing through it. It's one of the two. And so those are the areas that we want to pay attention to. Is kind of the concept there. So that's one thing going on here. The other is let's look at the trades taken only outside the volume area. So the market takes off here, and it's going to get a little hard to see because the range is so wide here. I have this set to always show me the volume. The low volume area and the high volume area. All right, so the fact that we're in a trend day here means that it can be the price itself gets squished up here. So what I'm going to do is let me change it real quick so that we don't have to look at this low volume area, which stays down here for most of the day. Actually, I just realized I can't do that without losing these codes because those are drawn in real time. So we're just gonna have to live with it here, and I'll manually adjust the scale. So all of this time here that we spent outside of the value area, there was no trades. We come back into it here, so we're not going to do anything there. And now we break back out here. It's interesting that on that break you get this 174 here. That we consider that sorry, minor interruption there. So it's interesting here that we're breaking through the high volume area. That 174 code, we generally consider that too aggressive. Here it's exactly it is exactly what you want. Something to think about. The other thing is this low volume node here. So all through here you can see that level's holding. There's nothing special about that price level except that the market won't go through it, and so we can very clearly see that. All right, let's see, and then what happens here? Now, let me do this here now so we can see this better. All right, so we short here. We're outside the value area. The value area is down here. We short here and then take the first one off there, and then we add here, and then we get taken out on a trail there. All right, so that makes +5, +8, and then minus a tick. And then we get short here for a 10-tick loss on 2 contracts. And then we get short here, 251, so it sees this break and says, I predicted that break will fail. We get short there. First target is there for +5. And then, again, taken out on it. We add there. What does that add? Is that a break? yeah, we add on the break at this level, and then we get taken out on a trail for plus 9.5, plus 1.5. And I think that's it. And then you go back into the value area here. You can see enough trading has occurred now that the value area expanded. You can see it right here, jumping up to here now. So no trades now, and I think that's it for the day, right? Yes, so we stop at 12:30 here, 30 minutes before the close. All right, so that's it for that. So we're going to continue to look at that. I'm intrigued by the low volume nodes and how they can give us some extra information. I'm going to start using that in the model in a variety of ways. Members will note that this is Rev 63, so we're already doing things where these codes and the trade execution is using a different set of data than the one in production. And what we want to do is see how can we incorporate other volume profile information, which really represents the structure of the market, into our decision-making process. So we're testing out this low volume node, sort of the developing low volume node study that we've written, and we're going to continue to play with that. The other thing that I'm looking at is from a volume profile perspective, when you exit the value area, right? So like right back here, right? When you exit we're either, whoops, I keep pressing the wrong button, I'm sorry. When we exit the value area, like you do right here, now at this point, you're either going to, break out and run like this, or you're going to revert back to the mean, or what's called the point of control, right? You're going to revert back to the place where there's been lots of trading, right? And so one of the things we want to look at is, okay, what are the values? What are the indicators or studies that the volume profile theory says to look at to help understand which way you're going to go? All right. And so I'll be looking at that, and I'm not interested necessarily in what do the volume profile theorists say to do. I just want to know what data they look at, and I'll let the machine figure it out. This is the point of machine learning. So we've got a couple of options here. One is to just incorporate this data into the existing model. The other is to create a separate model and sort of have them interact together to make a decision on what to do. All right, so this is just getting more sophisticated as we continue to work with machine learning. Now, much of what I just described here we'll discuss in Saturday's webinar, which is 11 o'clock. The link to that is on the main page. I think it says 2 o'clock on the main page still. I need to change that. It's 11 o'clock Pacific. If you sign up for it, you will get the correct time. If I don't get a chance to change that before you go there.